Hey, good morning, guys, and welcome back to my YouTube channel. This is Marco Trades here with another video. I want to start off by wishing everyone a happy 2025, happy new year, and I just hope everyone is ready to let's get to the bag. Let's stick to our biases, let's stick to our confluences, let's stick to our rules, and let's chase the bag religiously. This year is going to be a great year for trading, especially with great price action. So guys, I'm just thanking you for being here right now, and thank you for being a part of the journey to the top. As you can see, I know what you're wondering. Why does this guy has a BMW on his video? But that's because what we're going to be doing today is building my dream car. So it's just a little bit of motivation, something to look, forward to, especially once the bag comes in. So I'm just gonna build out my car, of course. Give me them 20-inch M dual spoke wheels. Yeah. Give me that. Ooh. Yeah, give me that Silverstone, broski. Look at this. Look at this, guys. Look at this. It's a coupe. Speakers. No one's gonna be in the back here, but it's good just to say. Look at those seatbelts. Oh my gosh. And those M buttons right there. It looks amazing, guys. Oh, that wasn't supposed to happen. Oh, I missed him came off of the streaming app. Okay, let's see what else. Obviously, carbon fiber on the trim, because why not? Additional package, driving assistance package, driving assistance professional package. I'm gonna assume that I want the professional package. Yeah. I think you're gonna. Oh, okay, so you have to have both. M carbon packet, exterior packet, but if it's an M car, wouldn't it have the exterior package already? I'm gonna assume that it will have it already. I'm gonna assume that I probably already have all the sporty stuff too. M Ultimate Care 1 bundle. Edition covered up to 4 years, 80 there. Okay. Alright. 144. Okay. I'm assuming this is in US. I'm assuming this is in US. Yeah, BMW USA. I'm in Canada, guys, so this is gonna cost me over 200 K for this whip. But this is my dream car, so this is my motivation this year. This is something I've been wanting for a very long time, and this year we're gonna chase the bag. I'm gonna chase the bag and get it for sure. BMW M8 competition 2025. I actually don't care if I got an older model, like a 2022 or 2023, just as long as it has low kilometers, just because I feel like there hasn't been any major changes in how they build the car. It's been kind of the same. So okay, so to the charts now, guys. So what I'm gonna do is I'm just gonna show you guys how I mark out my charts. So what I do when I come on the chart in the morning. Also, I want you guys to know that I did get a 250K account with Apex funding. I watched Tanja Trades online, so I used her code. If you go on her video, or one of her latest videos, you should have her code there too, but it's Tanja. So, or Tanya, but it's spelled Tanja, with a J, I guess. At least if you ask me. Ooh. Yeah, so I typed in that code, and you were able to get a funded account for freaking cheap. It was maybe it was $17 US, I think. Okay. All right. So First, we're gonna mark out our 12 a.m. opening price. The reason why we mark, oh, and I just want you guys to know, the reason why we're marking out these different levels is because price likes to refer to these price points throughout the day. As you're probably not gonna see it right now, but as we get into the video, you guys are gonna be able to see it more. So the first thing I mark out is my 12 a.m. opening price. All that is when the market opens at 12 a.m., it counts as a new day. So it's just price from 12 a.m. onward is what we would like to mark out. Plus, in case you didn't notice, this will be the start of your new daily candle as well, 12 a.m. Another thing I do after I mark that out is I like to go to London. So London is between about 2 a.m. and about 5 a.m. as well. So what I do is I just mark out the London highs. So let's go here. First, let's mark out the low. So this would be London low, because this is the lowest point that the market went in the time frame between 2 to 5. So it's the London, and then our London high would be right here as well. And damn, did London move. Look at that. So that's something. The reason why I mark out these areas is because I like to get a good idea of where price is headed, and I kind of get that idea based on what it has already done. So like, for example, did we take out the London high? Did we, you know what I mean? Like, did we take out the low? So for example, if you were to place an order here in this time frame in London, right? You are profitable. This whole way, you're profitable. So what's the market going to try to do? It's going to try to get you out the market. So in order for that to happen, it has to come above these highs. Vice versa, if you were profitable, let's say you were profitable here, right? And as the market's going up, you're moving your stop loss. Boom, you move your stop loss here. So what's the market gonna do? It's gonna try and take you out. Took you out with this move. Okay, but let's say you were in it for the longer haul. You didn't put your stop here. You kept your stop down here. What did market do? Boom, we took you out again. Okay, so it's just like good to know these certain points, because like I said, the market does go from levels of inefficiencies to levels of liquidity, and it goes back and forth. Like, it moves up and down and sideways, but it takes out those levels as it goes up and down. So now that we have those marked out, we're gonna move forward. The next time that we're gonna look for is our 8:30 opening price. And that's the time, or that's the price that markets were at 8:30. So if you hear something in the background, don't mind that. That's just my girlfriend. She's watching videos right now. And I don't have a preset for this, so I'm gonna use the 9:30, and I'm just gonna change the Madison, can you turn it down, please? Yeah. Or close the door, whichever works. Okay. So we got our 8:30 price as well, which is good. Now the next thing that I usually don't really mark out the 9:30 price, but for the sake of the video, I will mark it out. Okay, then we're gonna mark out our 9:30. 9:30. Is it this one? No, it's this one. Boom. So we got 12 a.m. marked out. We got London highs and lows marked out. We got 8:30 marked out, and we got 9:30 marked out. Now, like I said, guys, in order to be profitable in trading, it's really and truly just a numbers game, right? But that's basically what it is. You are profitable based on probability. You're not going to win every trade, and it's really unrealistic and unreasonable to think so. But if you have profitability on your side, then you can match up your wins and you can match up your losses. And if you can win more than you lose, you will continue to be in the game of trading. And over time, it might seem small, but as your capital grows, then the numbers will really start to, show up and make a difference. For example, I could make 20K, right? For example, and then if I lose 15K, I'm left with 5K. But that's 5K for the month. 5K for the month is good. You know what I mean? And that might, for some people, it might not be good. So let's just say that 5K a month is not good for you, right? But let's take that 20K, and let's say we went from making 20K to now we can make 100K. So and let's take that 5K, and since we times the 20 by 5, let's take the 5K and times it by 5. That's 25,000. So you made 100K and you lost most of it, 75. So now you have 25,000 left. You see how it's like a probability? Okay, anyway. So let's mark out my time frame. I told you guys already that I'll be trading between 10. So we're gonna mark that out. And 11:30, depending on the price action and when certain moves form. Okay? So this is what I'm thinking. Market's opening up, right? And we see this huge rundown. So when we see this, my mind automatically goes, okay, where's the level of liquidity that the market is trying to tag? It's outside. Probably going to 5 minute so you guys can see it better. So when market does this sharp move down, I don't automatically think, okay, the move for the day is bearish. Quite frankly, my assumption is it probable that today's move is going to be bullish? Because usually the first move is usually like a fake out move for a reversal. Now we do see the fake out move and we do see this reversal here, but let's keep in mind it does not happen in my time frame. So do I want to touch it? No, I'm not going to place a trade before 10 because that's what my rules suggest. I'm just back testing today. I want you guys to know that I did not take a trade today. I didn't take a trade today because I have my 9 to 5. I do work a full-time job. I did see the opportunity to place a trade, but I didn't just because I wasn't in the right headspace, and I realized that that's something that's affecting my trading and has affected my trading, like just trying to rush into the market or feeling like, oh, I'm gonna miss out on the move, and when I do that, it turns into gambling and it doesn't end well, and I tend to blow funded accounts doing that way. So I'm not gonna enter the market this year around unless I feel like absolutely comfortable. So anyway, we're on the 5 minute and we see market do this huge drop down. So I'm immediately looking at these equal lows. I'm looking at these relatively equal lows right here as well. I'm looking at these relatively equal lows. And then one thing that catches my eye immediately is this fair value gap. We're gonna put this across there like that. Let's see, it looks a bit different on the 15. So on the 15, this would be like an order block on the 15. Okay, so and then we see this fair value gap where the market goes down before it makes that reversal move. Now, kid you not, this is mad sketch. It's kind of sketchy just because of the imbalance and because of these fair value gaps and these long wicks. Like price could have done anything at this point. Price could have, came into this fair value gap, continue down. This fair value gap, continue down. That's why it's important to trade in your time frame. Because if you're not trading within your time frame, then that opens you up to like a lot of things going wrong for you. See, if you're trying to anticipate a move and placing a sell right here on this fair value gap, this does not end well for you. If you're looking for an inversion right here, this probably might not be, like, let's see actually. Yeah, if you're looking for an inversion right here, it doesn't really give you an entry. Like, I don't know where you would enter this fair value. Well, I guess this fair value gap here if you wanted to, but this isn't enough confirmation for me, especially with price wicking into this bearish fair value gap. It could have wicked and continued downward. It's not a safe move. I did watch TJR's channel earlier today, and I think he took this buy right here. I think he was in market off this buy, but he lost like $4,000. Honestly, this does look like this would have looked kind of promising. We have this huge displacement to the upside, building structure, change in state of delivery at this level, fair value gap, market was hella bullish, up again, fair value gap. We have these levels of liquidity or buy side liquidity. I'm gonna just mark it out for you guys. And also, it's important to annotate your chart. I know that there are some traders who say they like their charts to be clear, and if that's what you like, that's fair. But I like to annotate my charts just because I feel like the information that I'm looking at, it's valuable to me. And once I have the information there, when the market's like changing direction, it's easier to identify it. It's easier to say, okay, it's changing direction, it's probably going there. Like, you know what I mean? Like, for example, we have price go in this direction. If you're looking at price from here and you see this displacement, where do you think price is going to go? So for me, I can say, okay, well, price is probably going to go to the 12. And if it gets, oh shoot, I just realized you guys can't see me pointing at my screen. Price is going to go to the 12 a.m. open. And if it doesn't go there, it's probably going to go to 9:30. Okay, now change the state of delivery. We're up here. Where's price going to go? Okay, next we have 8:30 price open, and it could refer to that level. You feel me? And ultimately, I think, do I still have it marked out? Where is it? I know I have the low. What the hell? Did I not mark out London High? I did. Where is it? Huh. I guess I did not mark out London High. I could have swore I did. I think I did. Yeah, I did. This is London High. Oh my gosh. Sometimes these things like to hide from you. Yeah. So yeah, I could have marked out, you know, it might be heading to 8:30 price, or it might be heading to London High. Okay, so next, let's see. So you guys want to know about entries, so I'm not going to waste time. I'm just going to show you how I would have entered in. So this is my time frame right here. We see price do this move. I mark out my fair value gap. I mark my rejection. I'm going to be honest with you guys. I'm very honest. I will be honest. This right here, entry off of here, although TGR made that trade, and although if I'm looking at it, I'm probably thinking, this might be something that's good. Here's the problem with the trade and why it didn't play out. We are in a real premium right now. Look at all this action up here. Do you think that it's probable that market will go higher without making some form of serious retracement? I mean, you're talking a retracement into this fair value gap, a retracement into this fair value gap. And on a higher time frame, this whole thing is probably going to be like a bigger fair value gap. I can show you it because we all know that time is fractal. Or if you guys are learning from me, you should know. Look at that. Is it like, look at that. So if you're trying to make a trade up here, all of this, it's not likely, it's not probable. So that would have been something that I was wary of. We did not take a buy side, so I would have wanted us to like go up here, take a buy side, then reversal. But on the other hand, it's about a bias, right? So if the market doesn't take a buy side, you get to think, if the market didn't take a buy side, that kind of shows us that we're really bearish. Okay, and this has been my bread and butter setup. We have a bearish rejection block, and guys, listen, I'm watering at the mouth because I love this setup. Price comes into the bearish rejection block. Price goes down. Fair value gap right here. Are you expecting price to come back and fill it in the fair value gap? Yes, we are. Does it not? It does not. However, what we did do was create an inversion fair value gap. We have enclosure below the fair value gap here. We have a closure below the fair value gap here. And this opens right there, wicks in a tiny bit, starts to drop. Now, being really the aggressive trader that I am, once we have this closure and this closure, I'm in there. However, another thing you can do is you can use this as this is a bearish breaker block, right? Hey, listen, Twan, if you're watching a video, guys, and if you don't know, Twan is my cousin. If you're watching a video, please inform me. Sometimes I have problems like with the names of like the different PD arrays, but this is either a breaker block or an order block. I have problems, and that can be, you can use that as the combination of these 2 or 3 down close candles. You can, I'm not gonna put it cross, but you can put it cross, and then when price tap back in there, you could be on from there, or you could be in the trade from there. See? So yeah, but this honestly was just a huge drop, and for like the best entry for this wouldn't have come here unless, like I said, you're using this as an inversion fair value gap. Let me just mark that out for you guys taking notes. Or you guys can even screenshot it and like, you can screenshot it and like go back to it, because you can use this in trying to like decipher what's going to be your model, right? Bearish rejection, inversion fair value gap. It's very important that we close below the consequent encroachment of this move. You feel me? So all right, so yeah, so you can be super aggressive and enter in off here, but the best setup would have been for you to wait for price to get down here. We took out these lows. We did take out these lows, so we already have our change in state of delivery. Bearish rejection block, inversion fair value gap, change in state of delivery, right? Fair value gap right here. And this is why I tell you guys, like, it's so important to like know your PD arrays. They will not lead you astray. Fair value gap right here. Now, my only problem with this setup is that, like I said, it's all of this room right here. But let me show you how I would have like kind of like make my idea. My idea for this would kind of be like, I would have drawn out my fair value gap with my consequent encroachment right here. I'm gonna move my 930 price so you guys can see better. Okay? And I would be wanting to see if price has the ability to get above this consequent encroachment. If it touches above the consequent encroachment, if it wicks above, like, that's fine, but I wouldn't want to see that. I would kind of want to see like price stay down. So I would probably, once I saw like this rejection, I would be interested. Now what I would do next, and I'm gonna move my London lows and all that good stuff off, all that bread and butter stuff, you know, just so you guys can see. Once we had this rejection here, I'd be wanting to see if price could go above the consequent encroachment of this wick. And if it did, then I would be like, I wouldn't take it. But if it doesn't, in this regard, and it comes down and closes, comes back here, and it doesn't even want to come back into this wick, because I think it was ICT that said wicks are gaps, right? So you can use them like in the same kind of context. Matter of fact, bearish rejection block. So like, if price can't make it above here, I'm thinking, okay, price must want to go down. We watch price go down. Okay, if you don't want to be aggressive like me and get in, I don't really think this is aggressive, because, you know, institutional order flow entry drill right here, you could have got in off this fair value gap. But fair enough, if you're looking for another entry, there is a small gap right here. I'm going to show you guys. You could have gotten in. Could have gotten in right there. I'm showing you guys multiple ways to get in the market, right? And I want you guys to know too, not even 50%, but some of it is like finding ways to get into the market, but a lot of it is getting out of the market. You know what I mean? A lot of people come into like the market and they don't have a proper plan on how they're gonna take profit or how they're gonna exit. Don't be one of those guys. Look at this. You think the market's gonna go up forever? Nope. You think it's gonna go down forever? Nope. Like, you see how much times it goes up and down? You're not gonna be profitable if you're just setting your order and just, to the moon. This ain't Bitcoin, bro. This is not Bitcoin. So you need to know how you're really just getting in. So when I get in, or when we get in trades, I would look for the nearest levels of liquidities, unless you're taking like partials, because in that way you would look for the nearest level of liquidity, but you would also have your runners. So I'll give you an example of that, right? So let's say we entered in off the inversion gap. This would be the nearest level of liquidity. So this can be your take profit 1. Right? Let's say you have 2 TPs, just for the sake of the video. This can be your take profit 1. Boom. Price hits it. We're going to take off 1 contract at this level. We're then going to move our stop loss to break even, which I'm going to assume is around this level right here. Right? Now, price is going to retrace. We're not worried. We already took profit. So, for example, if we already took profit, let's say we're up $200. And stops at break even, we're not going to lose no money. Now, what's the next level of liquidity that you're going to aim for? Being realistic, since this is a fair value gap, and that's why it's important to refer to these older fair value gaps. But since this is a fair value gap, at the top of this is where I'm concerned, where I'm like, I don't know if I want to be in the market like once price touches this fair value gap, if it doesn't just displays true right away. So when I saw this reversal and this change of state of delivery, not 1, not 2, not 3, but 4 times, I am out of the game. I am seriously out of the game. But like I said, TP1, this could be TP2, and it would have hit. This low right here, it would have hit. But not even that. Like, if you just wanted your TP2 to be at the top of the fair value gap, you can do that as well. Because that's more probable, I'd say. So that's how it is when it comes to taking like partials. But like if you're just like one trade, like no TPs, you're like 1 TP, like you probably want to get out at this low. But other than that, I'm just going to show you like different ways that you could have gotten in. Could have gotten in aggressively, inversion fair value gap. You could have gotten in off this fair value gap right here. Bearish rejection block, fair value gap, you could have gotten in right there, right? You had about 3 separate opportunities to get into the market today, and where you could have been profitable. I mean, of course, you could also gotten in. I don't want to say that. I don't want to say that. I don't know. So I was gonna say you could have probably taken a buy, but this is not. No, that's more gambling. It's not that's a terrible move. But that would have been my moves for today, honestly. Like, oh, also, before I end the video, guys, because I just kind of wanted to do like a little walkthrough, and this is more like back testing, but you guys are back testing with me, and just showing you my thoughts and like what I would have done, right? So it's kind of like I'm making these videos because I want to, include you guys on the journey. I want to build a community. I want you guys to see what it is being a beginner trader, and just know that you aren't alone. And a lot of the things that you're learning and struggling with, like other people are going through it, learning and struggling and just trying to be profitable as well. Anything that you guys want to learn, want to talk about, want to discuss, drop it in the comments. You know what I mean? I know you guys don't know me, and I don't know you either, but just consider it like we're bros. You feel me? And if you need to know something, just comment it on the video when I see it, and I do answer fast for now until I get like 1 million subs, and then it'll take a bit longer. But yeah, if you see something you want to know, you can just ask me. I'm the type of guy, if I don't know the answer, I'll get the answer to you. I don't care if I gotta Google, ChatGPT, watch ICT videos, whatever, I'll get you the information. But yeah, I just want to thank you guys for following. I got 6 subs now. Road to 100. We're trying to get to 100 and 500. Ideally, by the end of the year, I do want to have like 10K subs. I feel like we could do it. I feel like 10K subs by the end of the year. No lie. Especially with the amount of like content and value that we're dishing out. It's most definitely. So yeah, these are my setups for the day, guys. I can show you like, and don't just look at the setups. Like, go on your own charts and mark it out, and like, because it's one thing that like telling you, but you're not gonna really get trading unless you actually doing it for yourself. Okay. Oh, what did I do? Okay. Where's the thing? Where's the thing? Okay, got it. Okay, bet. Like I said, my stop losses are 40 to 50 points. 44-point stop loss. The high of the stop loss is right at the top of this wick, which is above. Oh, you guys can't see me pointing. At the top of this wick, which is above the consequent encroachment here. Like I said, I don't like to see price go above my consequent encroachment. If it does, a lot of times the trade can fail. Now, wicks can do damage. Something can wick and then just price can move away really quickly. So ideally, you would want your stop loss to probably be right here. But seeing that this is an aggressive type entry, our stop loss is going to be there. And at this point, I don't really see market going back into this fair value gap. It has no reason. It's price range right here. And I actually want to push away from this fair value gap. That would show me that it's really bearish. So as you can see, 414 point TP right there. This is a huge range, guys. 414 points off this move with a 44-point stop loss. If you guys want to know what that is, I can show you. This isn't the micro. This is the regular NAS 100. I'm going to put 414. Boom. $2,070. 44 stop. Okay. So you're risking 220 and you just made 2,070. Okay? Okay? Not going to do the rest. I'm not going to like outline like the rest of these trades. You guys can go through and check and see. But this video has been long enough. Thank you guys for watching. Have a great day, and we will be back tomorrow to talk these charts and stock these charts. Have a great day, guys. Bye.